Welcome back to the deep dive, everybody. Today we're going to be taking a deep dive into a topic that I think is so incredibly important for so many organizations that are doing such vital work out there in the world, and that is the world of nonprofit bookkeeping and accounting. You guys sent in a ton of fantastic material that covers just like the whole waterfront from the absolute basic, like the really foundational principles, all the way through to like the really in-depth stuff of navigating federal grants and preparing for audits.
Yeah,
And so, what we're going to try to do is pull out some of those key insights and give you, the listener, a really solid understanding of the financial side of how to make a nonprofit run smoothly,
right.
without getting bogged down in like, overly technical language or anything like that.
Absolutely. Yeah. The materials you sent are so comprehensive. We're looking at like the fundamental principles of nonprofit accounting. We're going to be looking at how to understand key financial statements.
Hmm.
Um, we're going to talk about the nitty-gritty of record keeping.
Yeah.
So both like old school manual methods and the new, computer-based systems.
Yeah.
Making sure the book's balanced, which is,
Yeah.
pretty important. We're going to talk about budgeting, compliance. Nobody wants to run afoul of the IRS.
Right, right.
We're going to talk about the sometimes very confusing world of federal grants,
Yeah.
how to handle payroll taxes, understanding that all-important Form 990,
Yeah.
and then, kind of rounding it out, how to actually, do some financial analysis, and then what to expect when you have to go through the sometimes pretty scary process of an audit.
Yeah. Well, and I think a lot of times, people who start nonprofits or even people who work for nonprofits, they're drawn to the mission. Like whatever the mission of the organization is what calls them to, be a part of it.
Yeah.
But the finances can sometimes feel like overwhelming or like, oh, I don't even know where to begin. And so, our goal for you, the listener today, is to kind of like, give you that express lane, that shortcut
Mm.
to really understanding nonprofit finance. And we'll be focusing on those like aha moments and hopefully some surprising, pieces of information that will really stick with you, no matter where you're at in your kind of like level of expertise, whether you're, leading a brand new nonprofit or you've been doing this for a while, or, maybe you're just curious about this whole world of nonprofits and how these organizations handle their finances.
Right.
So, yeah, let's just jump right in. Let's unpack the fundamentals of nonprofit accounting.
Yeah, absolutely. So at its heart, nonprofit accounting is all about accountability.
Right.
Right. Because nonprofits, they rely so much on the generosity of donors. It's so important that they can demonstrate that they are using those donated funds responsibly and effectively to
Nice.
achieve their mission. And I think this deep commitment to accountability really distinguishes it from accounting in the for-profit world.
Yeah. And so, in the for-profit world, I mean, obviously the ultimate measure is profit, right? Like how much money did you did you make at the end of the day? But for nonprofits, it's different, right?
Oh,
Like
yeah.
it's really about the net assets. Sometimes you hear it referred to as equity.
Yeah.
But it's not about, making money to pay shareholders or, to enrich owners. It's really about, how do we, what are the resources that we have to carry out this mission?
Yeah, precisely. And I think to understand that better, we need to understand some of the basic terms,
Yeah. Okay.
right? Some fundamental terminology. So you'll hear the word assets a lot. And that's just, it's the things the organization owns that have value, right? So, cash in the bank, any investments they may have, property.
Mm-hmm.
Then you'll hear liabilities. And that's the opposite. That's what the organization owes to others. So think like accounts payable, any loans they might have outstanding.
Okay.
And then finally, net assets. So as we were talking about, this is kind of the nonprofit equivalent of equity.
Yeah.
And it represents the organization's resources after you subtract its liabilities.
Okay.
So that's what's left over to actually, pursue the mission.
Gotcha. So, I mean, this is kind of a basic question, but, in a for-profit business, money comes in from selling products or services, right?
Right.
But for a nonprofit, where's the money coming from?
Yeah. So the primary source of revenue for nonprofits is donations.
Okay.
And donations can take many forms, right? So you have
Yeah.
your straightforward cash contributions. You have grants. Grants, could be from foundations, could be from government agencies.
Mm-hmm.
You also have what we call in-kind donations.
Mm-hmm.
So these could be, think of volunteer time,
Oh, interesting.
So if if you have a nonprofit and you have people volunteering their time, that's essentially a donation.
Yeah.
They're donating their expertise or their time. Um, and then you could even have things like donated professional services.
Okay.
So maybe you have, I don't know, a lawyer who volunteers some of their time to, review a contract or something like that.
Right.
That, again, is a donation to the nonprofit. It is possible for nonprofits to kind of generate income through activities that are related to their mission.
Mm-hmm.
So, think of like, selling program-related materials or something like that. But, we'll get into that a little later when we talk about, compliance and unrelated business income.
Here.
But yeah, so mostly donations.
Okay, so the money comes in from these various, forms of donation, and then obviously it needs to be spent to actually carry out the work. So what are the main like categories that we think about when we think about, expenses for a nonprofit?
Yeah. So, generally, we categorize expenses into three main functional areas. So the first one is what we just call overhead.
Yeah.
And so that covers, just the basic like administrative costs of running a nonprofit. So your rent, utilities, office supplies, all that kind of stuff.
Right.
The second category is program management. So these are the direct costs associated with actually carrying out the nonprofit's mission.
Mm.
So, think of like salaries for the program staff, the cost of program materials.
Right.
And then finally, there's fundraising.
Mm.
So that's all the expenses incurred in, actually soliciting donations and, trying to secure grants and all that.
Right. So earlier we were talking about, net income, and, you had mentioned that in the nonprofit world, net income isn't really the same as profit.
Yeah.
So can you maybe just unpack that a little bit more for us?
Yeah. So in the for-profit world, when a business makes money, right, when revenues exceed expenses, that money, that profit is often distributed to the owners or the shareholders,
Mhm.
right? But in the nonprofit world, when a nonprofit's revenues exceed its expenses, we don't call that profit.
Okay.
We call it net income.
Gotcha.
But importantly, it's not distributed to anyone,
Okay.
right? There are no owners in a nonprofit.
Right.
So this money, it's actually an increase in the organization's net assets.
Okay.
And it's reinvested back into the nonprofit's programs and activities.
Gotcha. So, that makes perfect sense. So it's all about, growing that organization's, ability to carry out its mission. Okay. One more foundational concept that I think is really interesting is this idea of break-even analysis. So how does that apply to the nonprofit world?
Yeah, so break-even analysis, we often think of that in the context of a for-profit business.
Yeah.
Right? You're trying to figure out how much you need to sell
Great.
to, cover your costs.
Right.
But it can be a really useful concept for nonprofits as well,
Okay.
because it helps you determine, how much revenue you need to bring in to cover all your expenses.
Right.
Not just, your program expenses, but also all of that overhead, all that administrative stuff that keeps the lights on.
Right.
And knowing your break-even point is helpful internally, but it's also a very powerful fundraising tool,
Okay.
right? If you can go to a potential donor and say, hey, listen, we need $5,000 this month to, keep our after-school program running for these, 50 at-risk kids.
Yeah.
That's very motivating for a lot of people.
Yeah.
Right. It's very concrete. They know where their money's going.
Yeah. It's very tangible.
Exactly.
Okay, so we've laid a really good foundation here, I think, of some of the key terminology and kind of like the basic framework for nonprofit accounting. So let's move on to talking about how a nonprofit actually decides what accounting method to use. So in the research that you did, it seemed like there were two main approaches, right?
Yeah, there's two main methods that nonprofits use to keep track of their finances.
Mm-hmm.
The first one is called the cash basis, and the second one is called the accrual basis. So the cash basis, this one is very straightforward.
Okay.
It basically means you recognize a financial transaction when the cash actually changes hands.
Okay.
So when you get money in, you record it.
Yeah.
When you spend money, you record it.
Gotcha.
Pretty simple.
Okay.
And this is a method that a lot of bookkeepers will use, especially for like smaller organizations that have, simpler financial activity.
Okay, and what about the accrual method?
Yeah, so the accrual method is a little more nuanced.
Okay.
So it recognizes revenue when it's earned, regardless of when you actually receive the money. And it records expenses when they are incurred, regardless of when the cash goes out.
Okay.
So, in the U.S., we have something called GAAP, which is generally accepted accounting principles.
Okay.
And GAAP requires that financial statements are prepared using this accrual basis because it gives a more accurate picture of an organization's financial position over time.
Okay.
So these principles are actually established by an organization called FASB, which is the Financial Accounting Standards Board,
Mm,
and they're the kind of the independent body that sets those rules for how we prepare financial statements.
gotcha. So can you give us like a quick example that really shows the difference between cash and accrual? Because I think sometimes when you're just like talking in the abstract, it's hard to really grasp the difference.
Absolutely, absolutely. So let's say your nonprofit receives a pledge for a large donation in December, but the donor doesn't actually send you the check until January.
Okay.
Under the cash basis, you would record that donation in January when the cash is in your hand.
Okay.
But under the accrual basis, you would actually record that donation in December when it was earned,
Okay.
when the pledge was made.
Gotcha.
And you would record, a receivable, so meaning an amount that's owed to you
Okay.
at that point in time.
So accrual is kind of taking into account like promises made.
Exactly.
Like even if the cash hasn't changed hands yet.
Precisely.
Okay, that's really interesting. I like that distinction. Okay, so moving on. In the materials that you reviewed, there were some key financial statements that seem like every nonprofit needs to really understand.
Yeah.
So let's dive into those.
Okay.
Why don't we start with the statement of activities?
Yeah, so the statement of activities, sometimes you'll see it called the income statement or the statement of revenue, expenses, and changes in net assets.
Okay.
But it's basically showing how the nonprofit's resources have changed over a specific period of time.
Okay.
So, typically this will be like your fiscal year,
Okay.
and it details, where the money came from, so your revenues, your contributions, your grants,
Mm-hmm.
and then where the money went, so all of your various expenses.
Gotcha. So it's like a financial performance report card.
Exactly. Yeah, it's a report card for a specific time period. And at the bottom of this statement, it'll show whether the nonprofit had what we call a surplus, meaning that the revenue exceeded expenses, or a deficit,
Uh-huh.
where the expenses were more than the revenues.
Okay.
And it's also really important on this statement to kind of track restricted and unrestricted funds.
Okay.
So, for example, if a donor gives you a donation and says, hey, I want this money to be used specifically for your, youth literacy program,
Right.
you can't use that money for something else.
Gotcha.
Right. It's restricted.
Okay.
So even if, maybe your administrative costs are higher than you anticipated
Mm.
and you need cash to cover that,
Yeah.
you can't just dip into that restricted money.
Oh, interesting. Okay, so there's like different buckets.
Different buckets.
Yeah,
Yes.
gotcha. Okay, cool. So that's the statement of activities. What about the statement of financial position?
Yeah, so the statement of financial position,
Mhm.
that's often called the balance sheet, and that's basically a snapshot of a nonprofit's assets, liabilities, and net assets at a specific point in time.
Okay.
So it's like taking a picture of the organization's finances on a specific date.
Okay.
And it's really important for assessing an organization's financial health, specifically its solvency,
Okay.
right?
Right.
Which is its ability to actually meet its financial obligations.
Right.
So this statement, it kind of breaks down, what the organization owns and what it owes.
Okay.
So it categorizes assets into current assets, which means, they're expected to be used or converted to cash within 1 year,
Mm-hmm.
and then long-term assets, which, are not.
Okay.
And it does the same for liabilities. It's like current liabilities, long-term liabilities.
Yes. Here.
And then, kind of at the heart of it all, you have that fundamental accounting equation that we all learn in Accounting 101,
Mm-hmm.
which is assets equal liabilities plus net assets.
Right. Right. That's the thing that makes everything balance.
That's it. That's it.
Okay. Cool. So, we talked about the statement of activities, which is kind of like the flow of money over time. We talked about the statement of financial position, which is that snapshot. What about the cash flow statement?
Yeah, so the cash flow statement tracks the cash inflows and outflows over a period.
Okay.
So it's different from the statement of activities
Yeah.
because it's not looking at, revenue earned or expenses incurred.
Yeah.
It's just looking at when cash actually came into the organization and when cash went out of the organization.
Okay.
And it categorizes those flows into three kind of main activities.
Okay.
So you have operating activities, which are, the nonprofit's core, like mission-related work.
Mm-hmm.
You have investing activities, which are, things like buying or selling long-term assets.
Okay.
And then you have financing activities, which include, things like borrowing money or getting certain types of donations.
Okay.
So it's very similar. Like, think of your own personal bank account, right?
Mm.
You have money coming in, money going out, and this is basically that for the nonprofit.
Okay, so this helps us understand the liquidity of the organization.
Exactly.
Okay.
Yeah,
So how able they are to, like, meet their short-term cash needs.
exactly. Yeah, it's a very important statement.
Okay, cool. And then the last of the key financial statements that we were looking at in the research is the statement of functional expenses.
Hmm.
What does that one do?
Yeah, so the statement of functional expenses, it gives you a breakdown of the nonprofit's expenses based on their function.
Mm-hmm.
So, how much did they spend on program services? How much did they spend on management and general administration?
Okay.
And how much did they spend on fundraising?
Okay.
And, while it might not be required for all nonprofits, it's a really good practice in transparency.
Okay.
And it's often required by certain types of, organizations and grant-making bodies.
Gotcha.
So it's good to kind of know how to do that.
Yeah. Okay, so this whole picture, this whole financial picture that we're building here, it really depends on having accurate and well-maintained records, right?
Yeah, absolutely. Good record keeping is really the bedrock of good financial management.
Yeah.
It involves keeping a really clear and comprehensive paper trail of all financial transactions,
Mm-hmm.
keeping good, organized files with all the supporting documentation.
Yeah.
So, things like invoices, receipts, all that
Yeah.
stuff.
Okay.
And then, you've got to have a donors list, right?
Mhm.
So detailed, up-to-date list of your donors, their contact information, the dates and amounts of all their donations.
Mhm.
This is often required by auditors and for verification purposes.
Okay. And what are some of the things that a nonprofit needs to think about in terms of their actual record keeping system? Like we hear about manual systems and computerized systems. What are the kind of like pros and cons of each one?
Yeah, so for like a really small nonprofit with, just a few transactions a month, a manual system can be totally fine.
Okay.
Maybe they're just using a simple spreadsheet program like Excel or something like
Right.
that.
Right.
It's low cost and it can, it provides a tangible record.
Mm-hmm.
However, I think, as the nonprofit grows and starts to do more complex things, computerized accounting systems can be really helpful.
Right.
So, you've got things like QuickBooks. There are, specific accounting softwares that are, tailored for nonprofits.
Yeah.
And they make things a lot more efficient. They help to automate things,
Right.
and then they could, produce really good, really detailed reports.
Right.
But I think no matter what system you choose, the key thing is to back things up regularly,
Right.
especially if you're on a computerized system,
Mhm.
because you don't want to lose all your data.
Right. 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 Okay. So shifting gears a little bit, let's talk about budgeting because I think this is something that's really important in the nonprofit world.
Yeah, a budget is essentially a financial plan. It's a roadmap for how a nonprofit is going to use its money over a specific period of time.
Okay.
Typically, we think about a budget as being, for a fiscal year.
Okay.
And it lays out, how much money the organization have, how much it expects to receive,
Yeah.
and how much it plans to spend.
Okay.
It's really a vital tool for managing cash flow
Mhm.
and then making strategic decisions about, how to actually use the money.
Right. Right. So why is creating and then like sticking to a budget so important, especially in the nonprofit sector?
So, I mean, you need to have a plan if you want to be successful.
Right.
Right. And for a nonprofit, if you want to be financially sustainable over the long term and you want to achieve your mission, having a budget is just, it's essential.
Yeah.
It provides a framework for how you're going to achieve your goals.
Mm-hmm.
It allows you to track, your financial performance.
Yeah.
It's a key element of accountability
Right.
to your donors and your grantors
Yeah.
to show them that you're, being responsible and transparent with how you're using their money.
Yeah.
And then it also helps to, it's good to create a budget not just for the entire organization,
Right.
but also for individual programs
Gotcha.
so that you can make sure, that you're efficiently and effectively using resources to achieve your goals.
So what's that process look like? Like if a nonprofit is going to sit down and create a budget, walk us through the steps.
Yeah. So, I mean, it starts with, you got to outline your goals and objectives, right?
Yeah.
What do you want to achieve this year?
Okay.
Then you got to project your revenue. So where is the money going to come from?
Mm-hmm.
Donations, grants, maybe you have some income generating activities.
Mm-hmm.
Then, the not so fun part, you've got to project your expenses.
Yeah.
What are you going to spend your money on?
Mm-hmm.
And then once you've kind of put all that together and you have your budget finalized, it's really important to track that.
Right.
Right. To compare your actual revenues and expenses to what you had budgeted to make sure that you're on track.
Yeah. Yeah. And to make any adjustments if you need to.
Exactly.
Yeah. So we've talked about, some of the key concepts and, financial statements, but, as a nonprofit, you also have to make sure that you're staying on the right side of the law, right?
Right.
Like that you're following all the rules. So let's talk about compliance for a bit.
Yeah. So compliance in the nonprofit world it's a big deal, right? It means following all the rules, all the laws, the accounting principles, and, it's very important. So, obviously following GAAP, which we talked about, generally accepted accounting principles, that's key. And, the organization, FASB, the Financial Accounting Standards Board, they're the ones who kind of set those rules.
Right.
It's also important for nonprofits to follow the principle of consistency.
Okay.
So what that means is, once you've chosen a method, if you're going to use cash basis or accrual basis, stick to it.
Right.
Don't be switching back and forth because that makes it really hard to compare, your financial information over time.
Right. It makes it all like apples to oranges.
Exactly. And then, there's some other things. Nonprofits really need to avoid conflicts of interest.
Mm-hmm.
They need to make sure that they're not engaging in activities that could, jeopardize their tax-exempt status.
Right.
And a really big one is, making sure that they're filing that Form 990
Yeah.
with the IRS every year.
Yeah, so the 990, that's like the big one, right?
That's the big one, yeah.
So that basically is like reporting to the government what you're doing.
Exactly.
Yeah.
Gotcha. Okay. So zooming in a little bit on a very specific area of compliance, that's something that a lot of nonprofits deal with, which is federal grants.
Yes.
So walk us through, if you're a nonprofit, you're thinking about applying for federal grant, kind of what's that process?
So federal grants they can be a huge source of funding for nonprofits. They're giving money to help organizations, do all sorts of good work.
Right.
So the first step, if you're interested in getting a federal grant, is you've got to register your organization on grants.gov.
Okay.
That's like the main portal for federal grants.
Gotcha.
And then, you need to carefully review whatever grant opportunity you're looking at, download the application package, make sure you understand the guidelines, and then you submit that application online.
Okay.
And then you hope for the best. Right. So, fingers crossed, everything goes well. You get awarded this federal grant.
Yeah.
So then what do you have to do? Like, how do you actually, manage that money?
Yeah. So once you get the money, you got to be really careful about how you use it.
Right.
So you've got to keep really meticulous records of how the money is spent.
Okay.
Because you're going to have to show that to auditors.
Yeah.
And federal auditors, they're very specific about, what they need to see.
Mm-hmm.
And you've got to account for every dollar that's spent.
Okay.
Now, you don't necessarily have to set up like a separate bank account for the grant funds.
Okay.
But you have to make sure that, in your accounting system,
right,
that those funds are clearly tracked.
Okay.
And you also need to be aware of any match requirements that may be part of the grant.
Okay, so what's a match requirement?
So sometimes when you get a grant, the government or whoever's giving you the grant, they'll say, okay, we'll give you this much money, but you also have to contribute a certain amount.
Oh, interesting. Okay.
Right. So it's kind of like a shared responsibility.
Gotcha.
So you got to make sure that you can meet that.
Yeah.
And then there's reporting requirements as well.
Okay, so what kinds of reports do you have to submit?
Yeah, so there's a couple key ones.
Okay.
So there's the financial status report.
Okay.
That's often referred to as the SF-269.
Okay.
And that basically, gives a summary of how the money was spent.
Okay.
And then there's also the performance progress report.
Okay.
Sometimes called the PPR. And that basically